Hey guys, RC Peck here with Fearless Wealth, and in this video, we're going to fly around the world and we're gonna look at indexes, indices, pronounce it how you want, and we're gonna look at markets all around the world and look at what they're doing and seeing if they're getting stronger or if they're getting weaker. Now, this matters because when the whole world is moving higher, right, not just the US, but when Europe is moving higher and Asia is moving higher and China and Japan and Australasia, and Canada, when everything is moving higher in the stock market, it's hard to think that there is going to be an imminent crash, which you are constantly being sold. The point of knowing this, the point of knowing all these markets and what they're doing is it brings you clarity, it brings you certainty, it brings you comfort, it brings you confidence, it brings you competence. So let's jump into this. Let's kind of do a tour of the world. I'm going to get the screen share on and let's look at what's going on and go from there. So let me get to a nice screen share here. So here, let's just start with this. This is the Eurozone right here. Now I'm going to show ETFs and I'm going to also show indexes. When I show an index, it's going to be in its local currency. So here's just the Eurozone right here. And when I look at this, I come over here and I see this old high. By the way, guys, if you watch these videos long, if you know that this is the start of the trade war. In previous videos, I've talked about how the country, the area of the world that got hurt the most was actually Europe in the trade war, not the US and not China. But this was the start of the trade war. This is an ETF that tracks the Eurozone. And just look at what we got here, guys. The Eurozone is above past resistance. It has broken to new lifetime highs. Repeat after me, new lifetime highs are a good thing. Okay, now let's just drill into, I didn't mean to do that. We'll get to that one in a little bit. So here's Germany right here. And Germany is still working its way higher. The good news is it's broken this barrier here, and it's broken this barrier right here, and it's moving higher. So even though it has not, and this is EWG, this is an ETF, even though it has not broken to new lifetime highs, you can see it is breaking above that high point of 2020, its old high point of 2020, about the February 19th, and it's making a race towards its 2018 high. Now, if I just look at the index here, the DAX, this is the German stock market here, and this is the index, so it's not priced in any currency but local currency, you can see it's still working and it's still moving and still powering its way higher. Okay, now let's look at Japan. So we'll get in a plane, we'll jump over to Japan. Look at this. It broke 1. It broke 2, it broke 3, 4, 5, or you can just call this 3. It broke these 3 barriers right here, but it's actually even a bigger deal. If I zoom out, let's just go back, let's go back 25 years. So here's 25 years of the Nikkei. Look at this, it is broken that resistance. When it broke that resistance, it was hesitating up here for about 3 years, and it is just broken higher. Now, the Nikkei hit a lifetime high in 1989. First time I ever went to, oops, I didn't mean to do that. Let me go down here and let me do this. First time I went to Japan was in 1990, so it was right after the peak. No one knew it was the peak then, but man, it was amazing how rich Japan was, and Japan is marching towards that. Look at this resistance here that it is broken above right here. It is moving up, and I believe it's going to move up to that old 1989 high. That's about 50% above where it is. When you fly around the world and you look at other indexes, you get to see, right? Because if you live in the US, or if you live in Canada or Australia or Central Africa, you think in local. But the fact that we have Japan here, the third largest economy on the planet, moving higher, that's a big deal. So it's not just a US thing. It's not just a Europe thing. Let's just, because we're in Asia right now, oops, what's going on here? Let's just look at this little country called India. People often forget about India, but look at that. Right there, we're still super zoomed out. We don't need to be 35 years out, but you can see, and I'll zoom in again, India is at new lifetime highs. New lifetime highs is a sign of strength. And this isn't just new lifetime highs in the US, guys. That's a capital G, guys. That's inclusive for both men and women. When you break out to new lifetime highs, that means demand is coming in, right? What we're actually looking at here is the world demanding equities. I know you're sold that equities are going to crash, but that's actually not what is happening. If you look at this right here is the second largest economy on the planet, also known as China. And it's pretty ugly looking, and it is coming up here to test that trade war high, and it's moving higher. Now, if you have to invest in China for some reason, buy the A shares. The A shares are the local shares. This is ASHR. You can see that this is at new highs. Let's zoom out a little bit just to see if it's actually at new lifetime highs. So look at this. It broke the 19 high, the 20 high, the trade war high, and it is going right back here. I believe it wants to go right back there and test that. Now, this is a tradable ETF, and it wants to get there. Notice this is FXI, which is still Chinese stocks, but they measure them different. They're not A shares. And it's doing something very similar. It wants to get back. This one wants to get back to its trade war high. So as we move around the world, just notice, and I want to zoom back in, just start to notice that, okay, China's strengthening. Japan's at new 30-year highs. India's at new lifetime highs. Europe's at new lifetime highs. Germany's index, the DAX, is fighting to get above those trade war highs. The trading symbol, EWG, which I showed a minute ago, you can trade that, and that is looking in some ways slightly stronger because it's priced in US dollars. Here's EFA. Oops. Getting a little too, geez. I've got to slow down here. EFA. Okay, so here's EFA. Europe, Australia, Far East. This is another way of measuring the world. You can see that's at new lifetime highs, above the trade war high and above its 2020 high. So that is strength, guys. That's demand. When you see a price break above old highs, especially the double highs right here, that is full on demand. People are demanding more of it. Why this matters is when you look at price charts, you see what those 700 million people are doing around the world. About the top, the richest 10% of the planet owns the stock market. They control the stock market and they vote about the future. So what we're seeing is these 700 million people collectively voting and saying, are they demanding more shares? And if they are, prices going up. Or are they supplying their shares and giving their shares back because they're worried? And I think what you're seeing is people are demanding more and more shares. Here's the all-world ex-US. The all-world ex-US. Again, you're going to see this new lifetime highs for VEU. This is the Vanguard FTSE All-World ex-US. This is strength. We're seeing strength after strength after strength after strength. We're seeing strength around the world. Why this matters and why watching this channel is because it's giving you clarity to fight against. You are taught to be scared daily or hourly or by the minute, to be scared of the future, that the market's going to crash. And yet here we have price chart after price chart after price chart after price chart that not only is not crashing, but people are saying, I need more shares. I need more shares. Here's all world. So basically this is planet Earth right here. This is all the world stock markets. Now, the reason it looks so well is because half of it is the US stock market. But just look at this. Here's the trade war high here. That's the trade war high here. Here's the the pre-COVID high. Here's the post-COVID high. And this is all world. Now, again, it's looking better because half of it is the US. So if we jump over to the US here, The United States represents about 4% of the world population. It represents about 25% of world GDP, and it represents about half of the stock market valuation. And I know you're going to be taught that that is dangerous, but I want to say this without sounding like I'm a jerk. You have to update your thinking here. You can't think so much US, non-US, like, oh, the US has to crash, the US has to fall. No, if you think about some of the largest companies on the planet that are thriving, they just happen to be here. Microsoft happens to be here. Amazon happens to be here. Both of them in my backyard. Google just happens to be here. Facebook just happens to be here. Which is the one I'm missing? Amazon, Apple, Microsoft, Facebook. There's always one I'm missing. Alphabet, Google. I'll think of it. Then there's those teeny ones like Netflix. They're here. Now, they probably should be 25 companies and not 5 companies, but that's a conversation for another podcast or another video or another conversation, right? What we have is where the world is moving. And look, Shopify, I actually use Shopify. They're a Canadian company, and they're probably the biggest competition to Amazon. And we need to come up with a new word for technology and the internet. It's like, if your company is not focused on the 21st century, it's going to hurt, right? You have Walmart here that has figured out how to make money online. That's why it's going higher, right? You have this company called Kroger. That's Kellogg. Kellogg hasn't quite figured it out yet. You have this company called Kroger that is attempting to figure it out. It's a pretty ugly price chart, but notice how it's broken above past resistance and it's really still trying to work its way higher. So to me, these price charts are telling us, what are the 21st century companies, right? Now, I've moved from flying around the world to just talking about why certain markets are doing better, right? Why the US is doing better. And it's because a lot of these forward-thinking companies, let's call it that, if you're a forward-thinking company, a lot of them are here in the US. I've lived in 5 countries outside the US. I've been around the planet many, many times. I did it almost all in my 20s. And I can tell you, whether you like the US or not, there's something special about the US. For one thing, you're allowed to fire people in the US. My parents lived in Switzerland for 5 years, and you can't fire people there. I mean, you can, but it's something like 14 months of severance, and the other countries are all the same. So think how hesitant you are in Europe to hire people. Like, it's basically like you're marrying them. But not in the US. You're actually allowed to fire people in the US. And that might sound disgusting to some people, but that's how innovation happens. At least that's how it used to happen. So what we have here is, let me go back to VT. We have the world trending higher. We have the world trending higher. We have Europe trending higher. We have Asia trending higher. We have China, Japan, Germany, US, India. Top 5? Is India ahead or behind France? We have the top 5 economies on the planet trending higher. What's the takeaway? Learn to read price charts, but that's only about 5% of the game. It's actually the rewiring in your brain. It's being able to do what you're supposed to do with your money, so you can take your money and you can put it on the most powerful black squiggly line. If you're a member of my research, I'm putting out an amazing video about gold and that cryptocurrency, the Bitcoin. YouTube doesn't like you saying those words, by the way. So exclusive video about gold and what's going on with it right now out to all Fearless Wealth research clients, and a video to look at what's going on with crypto, because something so interesting is happening right now with those two. I'm just going to call them alternative currencies. And so I'll put that video out to my research clients. Thank you guys so much for being in my world. If you love this, please hit the like button. I'm still new to it. Hit the like button, guys. It matters to YouTube. It helps out. Thanks so much, guys, for being in my world, and I will see you on the next video. Okay, bye.